May profits be upon you. Welcome to another weekly Forex Forecast. We're looking at the US Dollar Index. The US Dollar Index. Now, are we bullish or bearish with the US Dollar Index? Are we bullish or bearish? Don't answer too quick. All right. This is the monthly time frame that we're looking at. We're looking at a high, to a low, a lower high. That is a lower low. There is a break below that, a break of market structure below this swing low on the monthly time frame. All right. When do we become bullish again? Are we bullish now? Bullish, yes. But did the market turn bullish? Not until it breaks this high, technically. When we break that high, then we have a bullish break of market structure. And that will signal that we are bullish. This is the last high and the high that created this low. And anything that happens in between that high and this low is internal, like a retracement or a pullback, which this is. So if we're in a retracement that is bullish, yeah, you're going to trade it bullishly. All right. But if you're looking at higher time frame dictation of market bias, technically, we are bearish. And make no mistake about that. All right. These pullbacks are pullbacks. They're retracements. Lower low, lower high. That lower high is a pullback. Lower low, lower high. That is a pullback. We did not take out this high. If we do one of these numbers, we've broken the swing high. We have become, the market has turned bullish. I'm looking for this impulsive move to be corrected into by a pullback, a retracement, to continue what? High, to make the next higher high. I hope you understand that basic structure explanation. But right now, doesn't matter. Doesn't matter. Am I trading? Am I looking for bullishness down here? Am I looking for the market to turn bullish? Am I looking for to take buys? Yes, I am. Even though we haven't technically taken out this high yet, the high that made this last low and created that last break of market structure to the downside is a bearish break of market structure. All right. So you got to go with the direction, the direction for the time frames that you trade. If you're a swing trader, you're looking at those higher time frames with a keen eye. If you are a day trader, the daily time frame becomes a little bit more important to you, so that you can look to take advantage of pullbacks and impulsive moves on the lower time frames. I hope that helps you. Okay, so what we have here is an uptrend. All right, this is a bullish channel, if you will. Just a structural observation. All right, it's making higher highs, higher lows, higher highs, higher. This is where we're looking for that next higher low. How do we know it's going to be a higher low? We don't know. But what we need to see first is a change in the state, a change in character, or a change in the state of delivery on the higher time frame. And what we can see is that price gave a very nice bullish engulfer in July, closing above the last high. It encouraged me to think, okay, price will probably pull back into this this monthly, and then we can find support in a pullback and then go up higher. Well, we swept the low, and as soon as we did, that's when we bounced. So my forecast at the time was that we should not, this low should be protected as it's coming into this diagonal support. But it was swept. It did not close below, which is what I was hoping, which is what I thought should happen. And it held. But what I didn't think was it would be swept last month. And it was. It did go low and it did sweep. So, but it did recover pretty quickly. I'm still thinking because of the closes here, because of the way the candles are closing. This one hasn't closed as yet, just opened. I'm looking for a wick here before price moves up. You got to go down before going up. You got to go up before going back down. That's the way the market makers work it. All right. So I am definitely looking for price to find some support in that previous monthly wick. All right. If we go down to the weekly, what do we see? We see price has moved sideways. It's taking its time. All right. And we can see also, if I enlarge it a little bit, we can see there's some points. We have these descending highs, which is a draw on buy side liquidity. It's a draw of buy side liquidity is drawing price to it. All right. Now, 2 weeks ago, when this candle was formed and it closed above the highs of the last two weekly candles, I was very encouraged that, hey, we should be next week, we should see price move up higher. And I thought that's exactly what it was going to do. However, we had some issues with politics over here in the U.S. and we have a shutdown of the government, and we had some bad job employment numbers, and we're still looking for NFP, the non-farm payroll, which should happen this week, Friday. We'll see. And while I'm on the subject, let's look at the economic calendar for the week ahead and what we can see with ECB and BOE, governors speaking and President Lagarde speaking. All right. But Tuesday, look at this. RBNZ, the New Zealand dollar. It's going to have an interest rate decision to be made, right? And that's going to happen Tuesday evening. Some of you will be Wednesday morning, early Wednesday morning, all right, which would take me to the JPY, the Bank of Japan. The governor is going to speak there, all right? Wednesday, FOMC, all right? So we want to see what the meeting minutes are, what they were saying during the meeting minutes and all. This isn't the FOMC event where they will lower the interest rate. This is minutes from the last meeting. All right. This doesn't bear relevance to the upcoming meeting. All right. So let's be careful of that. Thursday, we have some unemployment claims and whatnot, but on Friday we have non-farm payroll. Okay, that's going to be important and super important. Actually, the market might move in a thin, kind of narrow range up until the news comes. But let's be careful with the trading up until that point. I want to also show you this is the commitment of traders, the COT report for the US dollar index. All right, as of the 23rd of September, right? That is the latest one that we have, and you can see that during that time they added 1,500 long positions, but the majority are short on the US dollar. They are closing those short positions. They're closing 1,000 short positions and adding the almost equal number, a little bit more in long positions. And you can see that the majority is 63% short in the US dollar index. So, I don't base my trades on that. I just look at the fundamentals and think, All right, where's big money going? Where's the fund managers and whatnot? What direction are they leaning towards? And they are still short, but it's slowly changing. Now, if we look at last week's candle, look how it closed. It closed well within the range of the previous weekly candle, which I mentioned last week would indicate consolidation. All right. And that's only made worse by the fact that we don't have employment data coming out on time last week. So uh, the market might be in a bit of a standby mode. So we might see some more consolidation coming. But I want you to notice that the close was heading down, respected the wick, the 50% of the wick, and we see the pullback. Could we see some follow through down further? I think we should be seeing the opposite, honestly. If we go to the daily, we might be able to see it a little clearer. What I want you to see is market structure. Here, you can see this may be considered the change in the state of delivery. Why? Because this is the last bearish leg, the manipulation leg, if you will. And then price finally pulls up and closes well above those highs. All right. And that is a shift in the market from bearish to bullish. All right. I want you to also notice, like I brought out in the last video, the areas of fair value. These are two fair value gaps, and I said we're going to keep our eyes on these fair value gaps. The one down here is the higher probability. I said we're going to keep our eyes, see how the market reacts to the first one. Well, we saw that it finally closed past it. This one failed. All right, but if we look at the range of the of price action here, you can see that if we put the fibs on, wrong. There you go. You can see that price finally comes back to equilibrium. All right, we just missed that equilibrium area, but more importantly, what we see is, if I can get rid of that, that this fair value gap did not get closed below, and we are up at the top of that fair value gap area. All right. So, do I expect price to continue down? No, I do not. I think that we have reason to believe that this fair value gap, this area of fair value, is going to hold. Let me show you why. You see this? These bearish candles here. Price closed below. If price closed twice bearishly, and then we have this bullish close above these down close candles. This is a sell before the buy, and this is marking an order block, and it's a good order block insofar as, come on, man, it shows that there's some demand here. All right, by buyers, and this low right here acted as a liquidity low, inducing the movement of price down here, tapping, and I believe we're going to see price continue higher from here. So far, you see nothing but respect here, and with considering the fact that we have a shutdown going on, and that we have poor job numbers earlier. I think we have reason to believe that price may find support here. Let me go even lower to the 4-hour. And what I'm going to show you here is, although we have this sell before the buy up, all right, and price comes right back to it, and we are now inside of this bullish fair value gap on the 4-hour, all right. I want to also point out what I look for is how price reacts to these areas. All right. Now, if we mark it the way it's marked on the daily. This is a daily area of demand, a daily demand zone, right? If we go down back to the 4-hour, you can see I was looking for a reaction here. All right, I had even drawn a green arrow, if you remember, and this is what I was looking for. This push high. Why? Because this is a microcosm, a fractal view of what just happened over here. Price closed below the down close candles, the sell before the buy up. This candle closed above this range of price, all right, the range highs, all right, and this is a bullish indication, all right. Price pulled back into it, and we're looking for this low to be respected and protected, and so far it's holding, as you can see with these wicks here, all right. As soon as this is taken out, I stop looking for buys until I see another break of market structure to the upside. All right. If price takes out this protected low down here, then I'll be looking to short this market. All right. Now that you know what areas I'm looking for, this low and these lows, this one stops me from looking for buys. This one starts me looking for sells in this market. Do you understand? Right now, I'm looking at this holding as support, and this inside of the larger demand zone, I'm looking for that to hold as support. I'm looking for this low to stay protected, and I'm looking for price to build up this way. All right. And that's it. I've gone long enough on this video. I'm sorry it took so long. All right. But I hope you found it informative. If you did, make sure you hit the boost button. Make sure you hit the like button. And do subscribe to my channel so that I can put out more information for you. All right. And do make sure you check out the videos I'm going to have after this one. The next one will be the Euro USD, followed by the Pound USD. And I'm definitely going to look at the indices and gold as well. Have a good one, and may profits be upon you, of course.